This is our Forex blog showing our currency indexes in action, and I'd like to showcase some new tools we're about to release this week. These are our currency indexes, which let you see visually individual currencies doing. Here's the dollar. You can see it's trending up. It's above its hourly moving average in gray. It's hitting our upper containment band and bouncing off of it, and then it breaks the trend line around 3 o'clock. So that's a very high probability time to get into a reversal. So when the dollar is trending up, and you can see the daily, weekly, monthly trend on the bottom is up, you want to buy the dollar versus the weakest currency. Let's take a look at some of the other ones here. The Swiss broke from above to below its hourly moving average and pretty much trending down all day. And so when you have a strong dollar and a weak Swiss, now this isn't the best trade in the world because you can see earlier in the day the daily, weekly, monthly trend is up. The daily trend shifts down, but the weekly and monthly trend are still up. Ideally, you want to find one currency's trend that's up and the other one is weak on all time frames. But knowing intraday which currency is strong, which one's weak, you can buy breakouts like this. You can buy little pullbacks. There's a lot of different things you can do, and this will be a good chart to showcase one of the new tools we're releasing. I haven't decided how to name it yet. But it's basically a polynomial regression band, which lets you see, oops, I'm sorry, I have the wrong settings on this for intraday. Basically, you want to buy the lower bands when you have a strong uptrend. So you have buys here and here, here and here, and you can see when you have a trend with the currency indexes that's up, you can use this as a very good timing tool. Let's go back and look today, and we're going to link all the charts together. You can see the dollar was trending up, it's pulling back. Ideally, it comes down closer to its hourly moving average and starts to resume its uptrend. This is a pretty decent place to be buying the dollar, especially when our perfect oscillator hits -80. Typically, it's going to reverse off of that. And when it's at the +80 level, typically it's either going to stall or reverse. Here it failed, here it nailed the high, it came very close to the +80 level here and reversed violently. So the dollar is very likely to go up. The euro is weak. Let's take a look at selling euro dollar after around 3 o'clock. Here's 3 o'clock. We're looking for sells. Here's your first one right here, another one right here. You could draw your trend line on the way up right here and get short, especially above the upper bands. Small profit here, big one. Short here, 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 here. And the currency indexes mainly is just to decide which currencies to trade with. You can put these bands, although I haven't looked at it yet, on the actual currency indexes as well. Let's take a look at it on the dollar. I might need to increase the bandwidth a little bit for the indexes. There we go, that looks better. So if you're trading the dollar and you're buying it versus weak currencies, when it gets to the upper band, you want to be looking to get out. So here's around 11. You want to look for sells in the dollar versus maybe a currency that's likely to be going up. Let's take a look at the euro around 11. This one already got a bounce. Pound. Okay, so it wasn't quite at the lower band, but the New Zealand was very close to its lower bands. At 11, the New Zealand dollar is very likely to go up. The New Zealand is likely to bounce up. The dollar is likely to bounce down. Here's the actual chart itself. And so at 11 o'clock, we're looking for buys. Anytime you get a nice little double bottom or flag or wedge pattern, rectangle pattern at the lows, a pretty high probability place to buy. And you can use these on multiple different time frames. Instead of a straight line linear regression, this is a curved polynomial linear regression band. And once you identify a trend, you can start buying the pullbacks to the lower bands. This isn't the biggest trade in the world, but it did go up 20 pips, and this one went up 25 pips. And if you only get 10 pips per day, every day, you're going to get about 200 pips a month. Every 400 pips, as long as you risk a small amount of your account, like 1 or 2%, you should double your account every 2 months by just getting 10 pips per day. So when you see these trades of 20, 25 pips, that's almost a half a week's worth of net profits that you need to be trading well. Now you can see the yen, the daily, weekly, and monthly trend is down. You could put this on the yen, and we're going to release it this week at some point. I don't know the exact time. The ideal place is, pretty much these upper bands, and especially if it starts hitting the green or red bands at a little bit before 1600. The yen is extended, likely to reverse. Let's find a currency that at that time is likely to bounce. Most of the currencies have already started to go up, but most of the yen pairs are going to be going up. Euro yen at 1600. Let's just bring that chart up. Coming up to 1600, we're looking for a buy, and you can see this one went up from 137.20 all the way up to 50. Nice 30 pip explosion there. And most of the time for our entries, we're using range charts. So 5R, this is 5 pips per bar. Each bar, instead of being time-based, is based on the number of pips it moves. So we are looking for a buy coming up to 1600. I don't know if we, if it was exactly at the lows at 1530, but you see a nice little multi-bar up down pattern. That's typically a reversal pattern when it comes to range charts. So anytime it is at the high and breaks down from above to below, it's a good short, and from the bottom up. And as you can see, most times where you have at least a 5-bar move, you get some kind of reversal once it breaks out. And you can see it broke out here, reversed back up, and then continued. That's just one of the benefits of using range bars.